This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Today I'm going to give you the results of my grand experiment in dealing with inverse funds in a major way. I do not like shorting. It goes against my nature. I'm usually pretty bullish on the stock market, but I find myself being cautious. And I think cautious is warranted just because we haven't seen anything quite like this stock market, I don't think. Or at least you would have to go back 100 years to see anything similar. And particularly, this flu is extending longer than it did 100 years ago, and probably is going to keep extending just because it keeps getting milder but more contagious. And I think eventually it's going to, I'm hoping, I don't know this, I'm not a medical expert, but I'm hoping that it gets milder and it becomes like a common cold. That's the hope. And it does seem to be getting milder. So that's the great hope. But this is so unusual, the trading patterns. And let's put it this way, there's nothing like this in our lifetimes, okay, that we've seen before. And so it's difficult to know how to handle this. I put out some thoughts about what I was going to do. And of course, I'm a very active trader and I changed my mind. So I sort of did some of the things and I sort of did not do some of those things. And let's look what happened. I didn't recommend, I'm just describing what I'm doing. What you do is what you do. I don't know your personal situation. There's no way this can apply to everyone. It's just what I'm doing. I was thinking of putting money into the Direxion, Direxion, biotechnology ETF, symbol LABD. Every dollar that it goes down, you make $3. Okay, 300%. Now, you can make a lot of money. If it goes down 34%, you've doubled your money. It also works the other way. If it goes up 34%, you've lost all your money. So I'm talking about triple leverage here, and there's the gains and losses, and I watch them like a hawk. And I think when you do this, you have to watch them like a hawk, and you have to be right on it. And I don't let 3 minutes go by, but that I'm not looking at the price and thinking about what I'm doing.
Just as I suspected. Trash.
And I have my exit points and entry points calculated in advance. So that went up dramatically. I should have listened to my own advice. It went up 7%. So this lab D went up dramatically, and I should have listened to myself, but I didn't, and I think I know why I didn't. I used to be a psychologist, and my wife, before she died in 2017, was a psychiatrist, and we were both healthcare providers. And I'm very much, but we both also had long-term health problems. I've written a book about how I overcame multiple sclerosis after having it for 15 years. And I had primary progressive multiple sclerosis. And I literally have few, if any, symptoms now. And it's been clear since 2006. So, and I haven't run into myself, I haven't heard of somebody having it severely for 15 years and then recovering from it and remaining symptom-free for 15 years. I haven't run into that story, although I'm sure they exist. somewhere, but I haven't run into them. But it makes me very health conscious. Biotechnology in many ways saved my life. Uh, so I'm very hesitant to go against that. And so I don't think I could bring myself to do it. So uh, I think conscience can make you lose money sometimes, but I think it probably saves you more money and hassle in the long run than problems that it causes. At least that's my experience in viewing friends' life and what they go through. The other inverse fund, and it again is triple leveraged on the inverse side, was TZA, which is Direction Small Cap Inverse Fund, and it's triple leveraged. Again, you make $3 for every dollar that it goes down, and vice versa. You always want to remember the vice versa. Now, the reason I didn't go in on this was that the small caps have already been beaten down so badly that I feel kind of bad for them in a way. And I don't know how much more of a beating they can take, although the market tends to sometimes run on momentum and it can get excessive. And I think it will be excessive momentum if it keeps doing this, but it can keep doing this. But I found myself not that attracted to it. TZA, but that went up 3.5%. So uh, again, I probably was too cautious there. But these are 1 day decisions that for 1 day, who knows? In a week, maybe I'll look like a genius having passed it up. Uh, but I was looking desperately for something to invest in on the upside, realizing that I'm not that much into the downside of things. And so I always hold some Berkshire Hathaway. And I noticed that my Berkshire Hathaway has been doing unusually good. Okay. Berkshire Hathaway was up 3.1% that day. No, actually 2.1%. I'm sorry, 2.1% on that particular day, that Friday. And that's unusual for it to make that much movement in a day. And I was trying to look at the reasons why is it making this movement. And I think it's because they own a lot of banks and insurance companies. And so I looked at the Direction Financial Services Company, whose symbol is FAS, not company, it's an ETF, FAS, Financial Services by Direction, that's triple leveraged on the upside. So for every dollar it goes up, you make $3. And I put 60% of the money I typically invest in that, reasoning that the market's already expecting it to go up. It's expecting interest rates to go up 4 times, 0.25% at a time. It may go up more than that. They may raise rates more than that. They also may raise it less than that. But one thing's for certain, they're not going to go less than zero. Although, anything's possible. Maybe we'll see negative interest rates. I surely hope that's not the case. But if interest rates, start to mellow out and it looks like they're not going to do it more than twice, then I'll get out of it. So I think there's little downside risk, and I think there's a lot of upside to this. Berkshire Hathaway has done awfully well in the last year. The S&P has gone up about 20%. not 20%, 26% in the last year. And in the last year, Berkshire Hathaway has gone up about 36%. And so they're beating the S&P by 10 percentage points. Now, they usually do about the same, but for them, and the protection with Berkshire Hathaway is on the downside, but usually sacrifice a little bit on the upside. So for them to beat the S&P by 10 points is a little bit unusual. So I'm always going to keep some money in Berkshire Hathaway if I don't know what else to do. But I think it's because of the banks and the insurance companies. You know, during the Great Depression, my parents always used to tell me that the last companies left standing to have money were the insurance companies and the banks. Of course, the government bailing out the banks and the insurance companies in many ways kind of bailing out the government. So I think the banks and the insurance companies are sort of the last to go, and they're usually pretty prosperous when interest rates go higher. So I think it's a fairly safe thing. But again, I'm an active trader. I'll get out if things start to look like they're going to mellow out on the interest rates. Given the market situation being what it is, I was determined that I was going to force myself to short something. And so I ended up shorting the QQQs. And you do that by SQQ for short the QQQs, SQQQ. This is a triple leverage inverse fund. It triple leverages in an inverse way the top 100 companies on the NASDAQ. Now, it's a weighted average in that each company is weighted according to how much they contribute to the total capitalization of the total index. And so Apple is number one, and I think they contribute like 12% of the weighting in this fund. 8% of the fund of the ETF is due to Microsoft. So the top two companies, Apple and Microsoft, are responsible for 20% of the ETF. The top 8 largest stocks in the QQQs are responsible for 50% of the market capitalization. So it's heavily weighted for the large cap stocks on the NASDAQ. But there's still 50% that's due to the remaining 92%. So it's possible that these top 8 companies hold their own and move sideways, but the rest of it goes down significantly, in which case you would make significant money anyway. So I think there's very little risk that it's going to. I just do not see these large caps on the NASDAQ going up in a high interest rate environment. I think it's more likely the top 8 will go sideways and the bottom 50% weighting, the bottom 92% go down and drag the whole QQQ down. I think that's the most likely scenario. And if those 8 companies go down, well, the whole stock market's going down, in which case you'll wish that you were in nothing but inverse funds, either that or you were out of the market. And if it starts to crash significantly, I'm out at the drop of a hat. I think that's the way you got to be in this market. I used to be a buy and hold kind of guy, but over the years I've gotten to view that strategy as a buy and hold the bag strategy, or no strategy. The mutual fund managers, they used to tell you all the time, yeah, buy and hold, buy and hold. But if you looked at their portfolio turnover, typically they will turn over their entire portfolio about 300%. So you're buying and you're holding on, and they're churning it as if they were me or something, and probably worse than me. So I think that's they want you to hold the bag. No, thank you. I'm out. I like the market when it's going up. I don't really like it when it's going down. It's a lot of fun when it's going up. Man, it's just no fun when it's going down. I want to close with this chart comparing TZA, the small cap inverse ETF, to LABD, inverse biotechnology ETF. And you can see my thoughts and reasoning. The small caps in red down below have been beaten down so much, and they've lost, or at least this ETF has lost 38% in the last year, while LABD, now it is up significantly, but look how volatile that fund is. In November of 2021, it was down about 20%, and now it's up 53%, over a 70% increase in 2 months. Wow. So I think I might be doing okay bypassing on biotechnology, plus it does my conscience good. And also I think with the small cap situation, I won't be sad if small caps start to go up, because in my mind, what that means is that the whole market is going up, and that they've changed their mind on interest rates, which I think will be like the 7 loaves and 7 fishes suddenly appearing at a wedding because Jesus appeared. Just a little humor, no religious implications meant there. But in other words, it would be a miracle as it was then, and as it would be now. Amen. Thanks for watching the video. Be sure to like and subscribe so that you receive notifications of future videos. Good luck in all your investing, and be careful out there. I think it's possible to invest in this market. You just got to pick your spots and pick your directions. Goodbye. I will see you in the future.